you convinced online education is the future and COVID was just a starting point? Today we're looking at a promising edtech company specialized in the digital transformation of universities and how online learning is approached. Today we're looking at TWOU. Welcome fellow backholders, I'm Simon and this is Get Rich or Die Backholden, the finance channel with in-depth company analysis and valuations to help you find the next potential 10-bagger. Online education is on the rise. With the current pandemic, its scale and significance has only increased, and all three of us, Robert, Morris and I, have experienced swift shifts to online-only classes in our respective universities during 2020. We're all still studying in this format and don't expect to change for at least a couple of months. We became convinced that this shift in how education is generally approached will not simply reverse or even vanish once the pandemic is dealt with. So let's break down the four major advantages we want to highlight.
Number 1. It's flexible and safe. Since all you need to study is a laptop and a stable internet connection, you can virtually study from anywhere in the world. This could be the camping bus, a bar at the beach, or the comfort of your own bedroom. Number 2. It's time efficient. Since you don't have to get your ass physically into university anymore, you can literally wake up 10 minutes before class starts and still be on time. You don't have to travel back after university ends, and you don't even have to get to the library anymore. Number 3. Cost efficient. Degrees only provided via e-learning are often significantly cheaper. If traditional degrees become available in such formats on a large enough scale, we could see a general reduction in tuition fees. Not only this, studying abroad becomes much more feasible. If you only take online classes, then you can study from anywhere in the world and you don't necessarily have to move to the city your university is based in. Number 4. A broader selection of degrees. Because you can choose your university more freely, as just explained, you can search for more specific, more niche degree programs that may not even be offered in university next to your place of residence. Therefore, students will be able to cater better to their own needs and even choose degrees or careers they otherwise would not have pursued. Combined, these four advantages alone make for a compelling and robust argument for online education. Hence, why we began to search for investing opportunities in this field. TWOU stood out to us. Let's look at the details.
Yeah, thank you, Simon. The online education market is a very interesting market indeed. I believe we're just standing at the beginning of a transition to a different status quo for the education system. Not only are the global education and training expenditures consistently growing, the online markets seem to be nearly untouched. In higher education, for example, only about 1% of total revenues are generated online. Given the urgent need for online education plus the ongoing digitalization, it opens up a massive opportunity for a handful of companies. Only talking about the e-learning market, it is expected to grow by 8% on a year-to-year basis. This is the most conservative estimate I found. Estimations were ranging between 8% and 28%, so I wouldn't be surprised if we see growth rates much higher than that. Moving on to the players in this market, there are three major companies competing in fairly different segments. There's TWOU, the company we're most excited about, Tickersymbol TWOU, a US corporation offering full online graduation programs for undergrad and grad students in addition to alternative credential programs like short courses and bootcamps. Then there's Teleducation, Tickersymbol TAL, a Chinese company offering after-class tutoring for children and students from kindergarten to high school. And third at last there's Check, Tickersymbol CHGG, another US company offering online support for college students. While TEL derives its revenues almost exclusively from China and Check from the US, TWOU operates in the US, Hong Kong, South Africa and the UK. Besides, TWOU has the smallest market cap and the lowest price-to-sales ratio of the three. TWOU is trading at a price-to-sales ratio of about 4, resulting in a market cap of only $3 billion, while the other two are trading at a much higher price-to-sales ratio of about 10. Considering all this, TWOU is by far the most interesting company to look at. They are transforming traditional universities by making everything digital and are rightfully so already partnered with many of the Ivy League universities. Even though it is quite hard to compare those companies, two takeaways can be drawn by looking at their past revenues and profit margins. First, TEL has been growing the fastest. This might explain the high price-to-sales ratio. And second, TWOU is the only one which still has a negative operating margin. Not only do we believe that this margin will turn positive over time, I personally believe this might be the reason for the current mispricing of TWOU by the markets. Margins are often very hard to predict, and the possibility that the business becomes profitable sometimes seems to be perceived as too unlikely. That is exactly why we did our own estimations of future operating margins that will be explained by Robert.
To be able to calculate the fair value of a company, we need to know how profitable it is, hence we must analyze and forecast its margins. A starting point that gives us a good idea on how these can develop over time can be found in management statements. TWOU gave guidance for its expenses as a percentage of revenue during its investor day. With these, I calculated the expected gross and operating margins of TWOU for 2021 to 2025. There's a lot of confusion out there on which expenses are considered as cost of sales of TWOU. Generally, cost of sales is directly related to the service or product that the company is offering. Because these costs are used to calculate the gross margin, you will find different gross margins out there. However, when looking at the listed expenses of TWOU, I suggest that we use curriculum and teaching and support and service as cost of sales. Now that we cleared that up, let's talk about our gross margin development. They will stay flat at 69%, as TWOU won't be able to relatively decrease cost of sales by scaling. When looking at the operating margin, we see a totally different picture. The costs that we need to consider are G&A, R&D, and marketing and sales. All of these will relatively decline to revenues. The most significant expense of these is sales and marketing. It's exceptionally high, with 53% of revenues as of now. However, sales and marketing expenses from today will generate revenues in the upcoming years. Hence, it is not fair to compare it with the revenue from the same period. This is especially true for TWOU, because lots of their programs take students several years to finish, and revenue isn't generated all at once, but over the whole period of a program. The current operating margin is at -27% and will be approximately at 0% around 2024. 6 years later, in 2030, we forecast it to be around 20%. To calculate the operating margin of 2030, I further lowered the operating expenses as percentage of revenue because we assume that TWOU will continue to scale the business and get very profitable in the long run. Besides margins, it is also essential to know how much the company will grow over time. We assume that TWOU will increase its revenues sharply during this decade. This growth will be enabled through several factors. In the following, I will give you a few examples. First, the higher education market has a size of 550 billion in the US alone. Only 2% of it is digitized so far. Second, the CEO of TWOU mentioned during the ARK Invest podcast there's a research firm surveying higher education leaders. They asked them if online education is ready to disrupt the higher education market. The conclusion was that it is indeed ready for disruption. Third, there's an opportunity with bootcamps and short courses, especially in the enterprise sector, which is nearly untouched by TWOU as of today. All this combined with the general growth in e-learning sets TWOU up to grow with 20% per year until 2030. By that point, we estimate TWOU's annual revenue to be somewhere in the ballpark of $4.7 billion. Now let's get to the scenario analysis. We put all the earlier mentioned assumptions regarding margins and revenue into a DCF analysis to calculate the fair value per share of TWOU. Our base case assumes a CAGR of 20% and an operating margin of 20% in 2030. The bold marked number is the respective fair value of our base case. You might think we are too optimistic or too pessimistic. Because of that, we provide you a scenario analysis in which you can choose for yourself which scenario is the most realistic. Maybe you think TWOU will grow faster and will have higher margin. Perhaps you think the opposite is true. Decide this for yourself.
Let's look at TWOU from a technical perspective. First thing to notice is the bottom line at around $11.60, which was established in April 2014, tested in 2019 and tested again in 2020. Since it has been defended every time, it can be seen as a significant support level. From mid-2014 to mid-2018, we saw a pretty impressive uptrend in TWOU, which took the share price from $11 to $99. Not a 10-bagger, but a 9-bagger. So close. The sentiment shifted, and from 2018 to 2020 we saw an equally impressive downtrend that dumped the stock right back to where it started at $11.60, as mentioned before. The pandemic seemingly acted as a catalyst for TWOU, since the demand for online education exploded overnight. Price level broke the downtrend line, pulled back to said trend line to confirm the move, which is pretty much textbook behavior. It repeated the process once more and is now heading upwards for good. Currently, the price range is trading in a somewhat neutral zone between $49 and $32. What we'd like to see next is a break of the next previous high at $49 per daily close, or even better, a weekly close. Overall, the chart looks promising at the moment, and it could turn out to be a good time to start a position in TWOU. What is to come? Unsurprisingly, analysts have adjusted their estimates to TWOU's guidance. Whilst TWOU expect revenues of $208.5 million in Q4, analysts expect slightly less with $207.41 million. The non-GAAP EPS in Q4 depends mostly on stock-based compensation and amortization of intangible assets. The guidance is -12 cents and the estimates -10 cents. Sales guidance will be the most interesting number to look at during the next earnings, since TWOU gave no guidance on this at all. Analysts estimate close to $914 million in sales, so let's see if TWOU will be below or above that number and by how much. In terms of revenue and profits, we can see a pretty smooth uptrend in revenue over the course of the last 16 quarters. The net profit is approaching the green zone slowly but steadily, and depending on the next quarterly numbers, we might have a small uptrend at our hands here. If it continues, TWOU could reach profitability within a year. We've covered a lot of positives now, but what are the risks? Which potential showstoppers are we facing? First of all, it's important to realize how powerful the resistance against change in the sector is. Universities are selling experiences, not just education. Those experiences include moving to a different location, participating in campus life, wandering through the halls and libraries, making new friends, attending networking events in the evening. All these things are either impossible or much harder to achieve via online-only programs that rely solely on Zoom sessions. Therefore, universities fear to lose their individual flair, look and feel, things that set them apart from other universities. This results in a fear of losing prestige and influence, potentially not being able to justify the high tuition fees they collect currently. On a more personal level, it's worth noticing that many professors and instructors are not equipped for a digital change like this, since they never needed to teach in a different format. Humans like to stick what they are accustomed to since it feels safe and comfortable, so resistance from instructors should not come as a surprise. The implications of a pandemic are already being researched. Early studies indicate a decrease in course completion due to more dropouts and more failed exams. The quality of interactions between students and the instructors decreased, and the loss of concentration increased. It's too early to tell if this is just a period of adaptation or if the problems will persist, but it's worth keeping in mind. Similar struggles can be seen in social factors. Students have less connection to peers since they only see each other in Zoom classes. No dormants, campus vibes, or beer pong parties. Studying like this can feel very lonely and result in social isolation fueled by the necessity to prepare for exams and thus staying at home. As a consequence, a lack of motivation can occur, causing the student to fail or drop out at the later stage, or at least struggle a bit more. Furthermore, less bonding with the university is to be expected. Lastly, let's look at the financial risks. TWOU has not been able to increase its competitive advantage so far. This is something to keep an eye on. If indeed universities will be forced to lower their tuition fees or just struggle with too little applications in general, it could ultimately result in a defaulting of universities. Granted, it is to be expected that they would be saved by the government via tax money, but there is no guarantee for that. Maybe the adaptation of online education will not become mainstream after all, as we suggest and expect. This is the biggest risk in our opinion. In order for TWOU to really turn into a star in the long run, a cultural change is necessary. And that wraps up our analysis of TWOU. Has this information been helpful to you? Make sure to drop a like for the almighty YouTube algorithm and make sure to subscribe so you don't miss future content. Let us know in the comments if you agree with our thesis or in which regard you are of a different opinion. We'd love to discuss with you. Thanks for watching, and remember, get rich or die back whole.